All right, so it looks like we are live here with Craig DeCruz at Inverted Ventures. He's a COO, and just a little background on Inverted Ventures. So Inverted Ventures Group is essentially a single-family office with multiple businesses under its umbrella. They invest in seed and pre-seed stage venture capital companies, and they're also running proprietary long-short trading business. And they are working closely with other innovators and other investors for co-investment opportunities. And really excited to learn about Craig. Craig was introduced to me through a common friend. So excited to dive right into it. Thanks for popping in and making some time for all of us and the community. So maybe you can just jump in, Craig, and introduce yourself. Add a couple bullets on maybe your career, and maybe we can just kind of dive in terms of, where you grew up, a little bit about your family, things that you learned growing up, and kind of how that formed, your formative years in terms of where you are now in your career.
That sounds great. And thanks for having me, Joel. This is very exciting. So hi, everybody. My name is Craig DeCruz. I'm from Calgary, Alberta, Canada. Pretty much lived here my whole life. Was born in Toronto, Ontario. Moved here with my folks when I was 9 years old. So I consider myself kind of a raised Calgarian, pretty much. All my formative years were kind of here. Our family history is our family is all from Bangladesh. My parents met in Toronto, but they both immigrated here in the 70s with their parents. Built their lives up in Toronto, moved to Calgary. We have a pretty large family on my mom's side. There's 11 brothers and sisters, 22 grandchildren, 7 great-grandchildren. So we have a very large family. On my dad's side, there's 4 brothers and sisters and about 7 grandchildren, great-grandchildren. So I work primarily with my uncle, Shane, and my cousin, Nick. So Nick is the CEO of the company. Shane is the president. He was the first generation of wealth, I would say, in our family. He had a liquid natural gas business here in Calgary that he owned and ran for 24 years, I believe it was. And then he just wanted to professionalize his portfolio. So that's kind of how Inverted Ventures was started. That was the inception of it, was that he just wanted to do something different, invest in early stage tech startups. To go back to my history, went to high school here. I knew since I was in probably grade 5, I would say, that I wanted to be a chef. So my background is that I was a chef for 26 years here in Calgary. I worked around North America. I worked for Marriott International for just under 9 years, and they kind of sent me around to different properties around North America to kind of help them with numbers and really staff engagement. So if there was a property that was, not failing, but having trouble, meeting their numbers, their food cost goals, their revenue goals, things like that, I would go there and try and decipher what was happening and how we could fix it, because that's what I was doing at our property here in Calgary. So I've always kind of been interested in numbers. I had 2 plans in life: was chef, and if that wasn't going to work because I was really good with numbers, be an accountant. So it was a little bit of the spectrum there. So, as I was doing that for Marriott, I was, talking to my uncle, who is a businessman, has a lot of good insights. And he always said, I like the way you think about things. One day we're going to do something. And that kind of always stuck in the back of my mind, And we always talked about it. And as his son grew up, he wanted to follow in his dad's footsteps and, do business and things like that. So when I was 14 years old, I started buying and selling stocks. I got my own TD Waterhouse account and started, trading, looking at, bonds, things like that. So when my cousin turned 14 a few years later, he kind of asked his dad, hey, I want to get started investing in those types of things. And my uncle said, hey, I'm too busy with the business and with everything going on. Talk to Craig. He kind of knows what he's doing, and I've seen what he does, and he's been doing all right. So I started talking to Nick, and we started trading. We kind of pooled our money together and started trading stocks here and there. And we started investing in the cannabis space before it was legalized here in Canada. And we got in relatively early. It was one of those things that, I did a bunch of research on. Nick was interested in it, and we did really well. So it was one of those things where Nick said, okay, I like working with you too. Like, this is great. We should do something together. And I was always like, nah, I love cooking. Cooking's what I want to be a chef. That's always what I wanted to do. Not realizing that all these different things that I was working on in terms of trading, working for, a multi-billion-dollar company that was giving me the reins to multi-million-dollar properties to really help fix those properties in a way from the food and beverage aspect. I just thought, this is what chefs do. We go in and we fix the numbers and we make the food good and then we go home, right? Mm-hmm. So skip to 2019. My uncle and my cousin started Inverted Ventures. And it was going to be an early stage venture capital / angel investing style company. As you know, early 2020, COVID hit. So as they were really trying to figure out who to get deal flow from, who to join, what types of angel groups, things like that, everything kind of fell apart. So what happened was they put everything on hold. As we always did, we always talked about the markets and everything. We were saying, like, this COVID thing, this coronavirus thing is going to be pretty bad. And North American markets over-exaggerate quite a bit. Like, we overreact. So we said, if this comes to our shores, not if, when it comes to our shores, the markets, I think, are going to hurt, right? Mm-hmm. So we thought it was going to be like a 10%, reduction, because we didn't think that we would shut down and all these different things would happen. So we took everything out of the market. We took everything, like my RSPs, I put into low bond yielding notes, things like that. Like, we took everything out of the stock market and just sat in cash. And lo and behold, 6 weeks later, the market was down 30-something%. And we just went like, oh, okay, this is happening. So then we started to think of, okay, what's the next thing that we can invest in? Do we go right back into the stock market, even though it's at a 30% discount? Do we do that? And we did that with some of our personal investments in terms of RSPs and things like that. But what we did is we said, in that time when I was sent home from work, and it wasn't that I was laid off, it was they were paying me my full salary, because it was, you can get 2 weeks off and we'll be back to work in 2 weeks. Well, 2 weeks turned into 2 months, 2 months turned into 2 years. In that time frame, I started really learning about cryptocurrency and really reading on things, watching videos. My cousin was already well ingrained in that, because he worked for a couple crypto startups and a bunch of fintech startups right out of business school. So he was telling me, I remember Christmas of 2019 when they started the company, he's going, you should buy Ethereum, man. You should buy Bitcoin. And I'm going, magic internet money? Are you crazy? There's no way. Like, there's no way I'm going to put my money in that. And as I started reading up on it, and as I had time to read up on it, I went, oh man, he's right. Like, this could be the future. There's a lot of legs to this. So as we were looking at what do we do with this assets under management that was meant for VC and for angel, where do we put it? And we kind of came up with, where do we think the fastest reacting asset class will be in this time frame before we get back to normal? And we all came up with cryptocurrency. So we took 100% of our assets under management, which I don't recommend to anybody. We just put it all into crypto and said, we're going to do this for 3 months. And we're just going to see how it goes. With our research and everything that we went with, we knew that. So that was in April of 2020. We knew that a month later there was going to be a Bitcoin halving. We knew that, at that point, cryptocurrency was down about 65%. Mm-hmm. So we said, this is an asymmetric bet. We thought the most we could lose was about another 50%. The market would drop another 50% from where it was. But the upside was exponential. We could have 100x. So we're pretty risky people, and we're a pretty risky family office. So we said, we're willing to take that bet all day, every day. If we can only lose 50 and we'll have to grind and make our way back to our original principle, we can do that. But if we can get these X's on it, why not? So we did really well in the grand scheme of things. We 19x'd our investment at the end of the day. And then in July of 2021, so we were in it for a lot longer than we thought we were going to be as well. We were in it for over a year, just trading off and on, holding some things, trading some other things to make profits. And then in July of 2021, we transitioned and we started slowly selling some of our crypto position as it was, peaking. And we started getting back to the original thesis of the company, right? Of getting into the angel investing and doing the private equity type deals. So we joined a few angel groups, met a bunch of people, and that was the big thing. Was we were new. We were as green as green can be. I didn't understand what a term sheet was. I really didn't understand what due diligence was, even though I thought I did. So as we were working with these groups and meeting people, it was just like sponge, just taking in all the information we could to really learn what we were looking at. We read a lot of books, understood the markets, knew not to get too excited about every deal that was coming in, because that's kind of what happens. Like, you'd see 5 pitches and you'd want to invest in all 5 deals, but none of those 5 companies are around anymore, right? So it's very much, we were trying to just figure out our space. We knew we weren't going to rush into it. We were really going to build our thesis on how do we want to invest, who do we want to be in this space, who do we want to partner with, and what is our idea of investment? Because we are a single family office and we don't take in outside capital, so we don't have a fund or anything. We're just using our own family's assets to invest and hopefully grow that. There are no mandates, right? So it's so beautiful in that way that we don't have people that we're beholden to make investments and just rush into things just so that it looks like we're having people's money work. If I don't see a deal for 3 months, we don't invest a penny for 3 months, right? That's just kind of the way it is. So it's pretty nice in that sense. We're looking for certain things. We came up with the idea that we want to invest in paradigm shifts. We're looking for companies that are going to make fundamental change in the industry that they operate. So not incremental change. We've had many opportunities to invest in really good companies that are doing well, that were just a little bit of a blip. They were a little bit of a change to what the status quo was in the industry, or a nice add-on. And we passed on it because we're looking, again, we're a bit riskier. We're looking for something that we're not looking for the 2 to 3x. We're looking for the 10, 20, 30, 100x. So we're looking for a company that might be a little off the beaten path, but really wants to try and make a change. And that's what we try and deploy our capital to.
Yeah, that makes sense. I mean, it's helpful when you don't have to, follow a certain type of portfolio construction. I guess some of the other families that you've been networking with, especially in Canada, what are some of the common threads that you've been seeing in terms of asset allocation? Some of the families are probably doing some venture. Many of the families are sticking with the industry that they're comfortable with. But have you seen any common threads in terms of like a percentage into venture, percentage into private equity, maybe some debt vehicles? We'd love to know kind of the common threads that you're seeing, maybe with friends, and then also just specifically in Canada, knowing that there's a huge, there is a venture ecosystem there, but there's also an industrial oil energy ecosystem there too. So I'm curious to know, what are some of the hot sectors that people are also getting exposure to?
Okay, yeah. So to the first part of your question, I think that a lot of the family offices do break it apart. So it's 10 to 15% in the venture capital. I would say another 10% in maybe private equity, real estate, or industrial commercial real estate type properties. The debt facilities is something that we're seeing a lot more over the last year. Is that there's a lot of family offices we met that really got into the debt space over, I would say, maybe the past 18 months, because a lot of them saw that the oil, that the energy sector, oil, whatever, they had a lot of debt on their books. So they were buying that debt and then, getting the percentages on top of it. And they knew that energy was going to uptick because of a revamping in COVID. And that's exactly what we saw. So I talked to 2 family offices that we're relatively close with, and they were saying that some of their best bets were buying some of those debt facilities off these off of these companies, and they did really well on them. I would say that, in terms of sectors in Canada as a whole, it differs from the region. We're such a vast nation, and it's so large. When you look out east, you'll see a lot of companies that are looking at, maintaining, the oceans, right? So in the maritime provinces, it's very agriculture, but to the sea agriculture, sea maintenance, things like that they're looking at. Also oil. There's lots of oil in Nova Scotia, Newfoundland, places like that. So a lot of energy related things that way, wind energy. When you get to more, Quebec, Ontario, and the prairies, it's very energy related. So, lots of oil and gas, lots of transitioning to solar now. There's lots of conversations on that. Solar fields are going up all over the prairies right now. The one area that we're interested in and is growing very heavily in the West is actually agricultural tech. So ag tech is one of those big spaces right now where, we all know the problems that are going on around the world in the Ukraine and, with Russia and Ukraine not planting their spring wheat last year, things like that. Canada has the opportunity, we feel, to be, in a way, the savior of these problems of the world. The U.S., Joe Biden said, told the farmers, please double, your output. Well, that was after everything was already planted. Yeah. And it's very hard. The U.S. is a net exporter as well, but there's a lot of people in the U.S. and you need to feed those people. So you keep some of that. In Canada, there's, under 40 million people. And we have such swaths of land that if we are able to double our output, and we have to be a net exporter because we are a large country with a small population. So we can fulfill the needs for certain areas. Might not be 100%, but we can for sure ramp up our production and help things. So that's the way we're looking at it. And when you look at, places in South America, Australia, New Zealand, where they're using technology, a lot of that technology has been, thought up, made, invented by small town Saskatchewan and Alberta farmers that just have scaled these products and is being used around the world. So there's a lot of innovation in the prairies, and we're heavily looking in this area to invest and find, great companies that are looking to change things for the better.
Yeah, no, that's great. And I guess, what have you seen in terms of the emerging opportunities, now with all the agriculture that's growing, just deeper on the tech side, what are some, because of all those activities, what are some areas that are kind of emerging on, more of the venture side, especially with probably the other funds that you're working with? I guess, how have you kind of collaborated with, we met through one of the really great emerging funds that is now in my community, but and that's great. I think part of it too, which is magical, is you never know who you're going to meet, who these new friends are that come into your ecosystem. They just, and I think it's super important to just be nice to everybody, right? And if you just focus on positivity, focus on optimizing for just good people in your life, those people just kind of connect you to other good people. You end up doing deals together, collaborating together, giving that person maybe some customers, depending on what kind of business you're doing. So maybe tell me a little bit about that. Maybe some of the magical things that you've been seeing in the venture ecosystem, especially with collaborating with these emerging fund managers. And this could also give, and the reason why I'm asking you this is because this could also give insight for fund managers to know how to collaborate with you as well.
No, that's great. I think the key word you're using is collaborate. And I believe that in Western Canada, but especially Alberta, the collaborative nature of everyone within this space is, I think, remarkable. That is what drives me every day, is that I'm meeting great people every day. And it's not great people that are being nice for the sake of being nice. It's actual, honest, earnest people that are looking we have the same outlook. We all want to better the world. We all want to make changes, but we also want to make a little bit of money while doing it, right? But I would say with the early stage funds here, Weave is who introduced us. They're looking to really look at innovative different deals. I met Mark and Marco through the Valhalla Angel Network here in Calgary, and those guys have become some of our closest friends and confidants in the industry. We've partnered on 2 deals now. We're LPs in their fund, and they're just great. The way that they look at things, their due diligence is, I believe, second to none. To the point where we're in a way using their methods to try and help our due diligence. And it's that, again, collaborative nature. When we talk, we're all looking at different things. From the agricultural tech side, there's a fund here called Tallgrass Ventures, and they run this fund, and they're focusing on Western Canadian agricultural tech, but they are looking around the world as well. So they are looking at Israel, and they're looking in the UK, and they're looking in Denmark, and they're looking everywhere. And I really like that their focus is, is in Western Canada, but there are some great places around the world doing some amazing things with ag too, that we can help our ecosystem here and then branch out. So, collaborative, I think, is the key word for what we're doing in this space, is that everyone's collaborating, everyone's working together. There's none of this, I found a deal and someone's interested, so I'm just going to fill the round because I don't, you find a lot of that in certain sectors and pockets of this industry. And I found that here people will make room if they know that you're interested and you're a good person and a good player. And, that's what, like you said, being nice and building relationships is absolutely key to success in this field.
I would say, the underutilized resource, and this has gotten me into amazing deals. This has gotten me into rooms that are essentially really difficult to get into, so tonight, I'm going to a really amazing, private event with some large institutional single family offices, but it was really just through, I introduced that person to a couple other families, and I was able to kind of attend to some of these other events. So I think one thing that I've seen, and Mark did this, right? So if you can connect people to other people that are of value, so, if you're doing agri-tech and there's this really amazing fund that has access to some of the hottest agri-tech deals, and those people are going to remember that they met each other because of that one super connector. So I think intros really are a great way for, I think, fund managers to get that LP allocation eventually long term, just through osmosis. And then I think just adding value. There was an LP that was looking for a template or something for like a venture debt kind of deal. They're like, hey, do you have any templates for venture debt? And I happened to have the template by luck, and that person was super gracious, and they made some really great intros. So I think, to your point, if the theme is collaboration, seeing how you can, provide value to that person and support them in their journey. And I also believe that if you're running a fund and you're collaborating with family offices or just other LPs, involve them in the investment committee process, get their feedback, because many of the people, what I love about family offices, many of them are very experienced entrepreneurs. So they've got that operating experience and they've been around the block, so they can add a lot of wisdom in terms of their days of building businesses. They could probably be mentors, which could be really great value to the portfolio companies. And many of them are also sophisticated investors. They just don't have time to do all the sourcing and screening and the diligence. So one way to scale, which is worth the cost of the management fee and the carry, is to invest into funds. Because in my experience, right, a lot of times if that fund especially is focused in an area that you don't have expertise in, you can get invited to some of their demo days, their AGMs. So it just opens up a lot of opportunity. And also potential, hopefully, financial return as well. So
exactly, and there's so many different, and that's the one thing, in our space in Western Canada, there aren't that many funds, and there are some coming up now. And I know, in the States and especially in Ontario, there's a lot of funds. So when we first were looking for funds to invest in, because for the exact same reason as you said. We're not a master of certain areas. So we said, okay, let's look at med tech or, pharma tech. Let's find a fund. We were hard pressed to find a fund in Canada that does that, right? There are a couple now, but it's a very nascent space. It seems like the fund areas. There's a lot of funds when it comes to venture debt and real estate. Lots of those. Those are everywhere. But we're finding now funds. There's a fund out of Vancouver that we're not LPs with yet. It's going to happen at some point. But the whole fund is based on AI, and they're looking at all these companies that are doing things in AI and machine learning. Now we have no idea about that, but the GP, the manager of that fund, is so in depth and knowledgeable about it. Why would you not want to invest with someone who knows so much about it and would be able to have great insight? And then, like you said, potentially you get some returns on it, but you're going to be in the room with some really smart people. You're going to get to actually learn about that industry that you don't have much experience in, and you just pay the little bit of fees, but you're getting access and understanding. That's the big thing, I think, is understanding in these deals that you wouldn't necessarily get if you weren't involved in a fund like that.
Yeah, no, I totally agree. I think, the access and really the education, I think that's a great way that funds can also build relationships where, and maybe you can tell me about this too, but, maybe just advice for emerging managers, but I think, look, if that person did a webinar on artificial intelligence, or they kind of did a meetup group, showcasing their portfolio companies, talking about the trends in AI, that's really of value to you. And, obviously you could do a couple, direct deals and put your own capital to work into those direct deals. But at the same time, you got to invest in, all those deals deal by deal, versus if you prefer the exposure. I guess the analogy is like, would you rather just invest in, something like the S&P 500 that's maybe concentrated, or just invest in one individual security and hope that one security hits? We all know that, entrepreneurship and also venture is super risky. So having some type of diversified approach that's risk adjusted also helps. And, also just thinking about, inflation too, right? I mean, optimizing for that as well. So, I mean, what are some of the macro things that you're hearing? I mean, you probably get all of our news, so you probably heard about all the craziness with us in the last couple of weeks, but, what are people talking about in the news on the macro side in your region?
I would say, we're looking in your region really for guidance, right? We're looking for what's going to happen. I can tell you this, in half an hour, right? Jay Powell's going to be on, and everyone's on pins and needles on what he's going to say. So from a macro perspective, we follow what is happening around the world very closely, because we have our proprietary long short hedge book that we are trading. So, but we're looking at this today. We're waiting. We have our fingers on the button. What is it going to be, hawkish or is it going to be dovish? We expect hawkish,
sure,
right? So there's all these different things. We might be wrong. Who knows? But when I talk to people in Alberta, or I talk to people in Canada, we're looking down to the States to see what's happening. It's kind of funny because last week the Bank of Canada, right, didn't raise rates. So it was funny because the U.S. market pumped off of that, and we're like, since when does our market help the U.S. market? We're so small. It's always the other way around, right? But it gave people hope that, well, if Canada isn't going to raise rates, and if the ECB isn't going to raise rates, well, then hopefully they don't raise rates and they pause in the U.S. as well. I just don't see that happening, right? So that's kind of the big thing. So I'm talking to everybody here, and we're all talking and trying to figure out our portfolios. And I think there's a very heavy wait and see approach right now from a macro level, especially in VC. Some of our founders in the companies that we're invested in are looking to raise rounds right now, and a lot of the answers they're getting is, we're just kind of sitting back and waiting to see what happens. The R word's getting thrown around a lot lately, and I think we're in a recession, just no one wants to say it. So I think a lot of the the money managers, the investors are being a little bit shy, a bit coy to not deploy too much right now because A, we could be in a recession and it could get worse, and B, valuations are going to come down. So why buy now when you can buy at a discount in 3 months?
Yeah, no, that's true. I mean, it's the same thing with venture as well. You know, people are wondering if this is a good time to, you know, invest in these companies. You know, the valuations are, you know, all across the board. You know, some of the price points are pretty low, and then there's, you know, obviously there's things that are just business as usual. You know, the price points haven't really gone up too high in terms of the valuation. So so it really depends on who you talk to, and you know, there's a new headline every week. So where everybody's kind of watching the pulse, and I am familiar with public markets. You know, I used to run a fintech. I used to run as the head of product for a large fintech conglomerate, and you know, my experience when it comes to software, you know, portfolio managers, buy side analysts, they need to know how the news is driving their holdings. So oftentimes, right, if you can kind of pair the news alongside like how much you have exposure to, that's definitely a driving factor, and it could, you know, obviously impact trade execution in terms of like how you're balancing your portfolio. But maybe you can unpack, you know, your strategy in terms, you know, just at a high level in terms of like the hedge strategy that you have. You know, what are some of the fundamentals? Like if somebody kind of wants to maybe start out, maybe building that practice into their family office, what are some kind of high level frameworks that you guys have in mind in terms of, I guess you guys are long, short hedge, right?
Yes.
Yeah.
Yeah. And so my uncle who had the liquid natural gas company, his COO at the time was their trader. So he traded all the commodities for them, and, you know, bought the options contracts and things like that. And he was one of the best traders that my uncle ever worked with. So my uncle actually, we asked him to come and join our company, and he's heading up our long short hedge book. So he's creating a lot of the processes. He's created our risk model. You know, we're doing, you know, VAR models. So what I would recommend is, if anyone's looking to start this, either learn about it, or if you know about it, create these VAR models, create, you know, value at risk models where you need to know, like, what are your stops going to be? Well, you know, look at charts. You know, technical analysis for us is very big. We're always looking at charts and, you know, Bollinger Bands and, you know, every different thing that we have on TradingView that we're going through and just seeing like, okay, is the RSI oversold? Is, you know, all these different indicators that tell us, okay, this might be a good time to buy, or this might be a good time to sell, and short something. So when we're looking at a market like right now, I would say looking at tech, right? All the FANG stocks, right? All those Facebook, Amazon, they're so overbought. Like, and the thing we laugh about, but the market is irrational, and it can be irrational longer than you can stay liquid, right? So this market has been irrationally just up in a phase where people have less money to spend and are spending less money. So the revenue's not going to come in. The ad revenue is not coming in to, say, a company like Meta. They're laying off thousands of people, yet their stock price keeps going up. That kind of hasn't happened historically ever. So what's changed? Is it just people are just trying to drive up these because it's tech, or is there something fundamentally that's just not happening that we're not fully understanding? So we're trying to understand that, and then we're most likely going to short tech stocks because of how overbought they are. But we're not going to do it right now before a Fed call that could potentially pump the market to crazy levels, or could drop the market by crazy levels. So it's a very volatile time. So I do believe that, you know, creating a thesis on how you want to trade, following some very good analysts that you might, you know, see online or subscribe to, and then, you know, creating models on how risky do you want to be? How much are you willing to lose to make a bet? and then have your stops in place so that you can not lose, the entire AUM.
Yeah, no, I think having those downside risk programmatic features can definitely help.
Yeah.
Especially when you're managing more capital at scale, kind of having those systems in place. Have you guys had an interest also in fintech? I'm sure there's a lot of hot fintech companies. I don't know how the ecosystem is in your region, but I know that there's the Halt Accelerator in Canada. They do a lot of fintech stuff, and I'm in New York, so we do everything fintech,
All fintech
as well. But like, what are your thoughts on just kind of the fintech ecosystem? Is that something you're excited about? And how do you see that supporting the public securities industry? There's a lot of hot quant technologies. Especially with AI, right? I mean, using AI trading. Do you feel that there will be a point where some of that can be? I mean, there's already a lot of algos, and that's why we hire quants. But just what's your outlook on the future in terms of kind of your strategies and making that a little more AI driven?
For us as a company, we're not necessarily looking at the AI driven to kind of change our business.
Yeah.
We're looking at that to change other businesses around us. So I would say that is, fintech is a really big part of our ecosystem right now. In Alberta, there is especially in Calgary where I am, it was all of the oil and gas companies are here, all their head offices, and they're still here. But the downtown core was pretty much decimated before the great financial crisis in 2008 to just 2-3 years ago. A lot of tech companies, especially fintech companies, are coming in and taking over the downtown, and we're getting people from out east, even New York, you know what I mean, coming over and saying, I can still do my job in, these big metropolitan hubs and live in Calgary, which is the last remaining affordable large city in Canada. And people can have quality of life, make good money, live in the downtown core for relatively cheap. So it's, that's kind of the way that fintech is growing in Alberta. And we're seeing a lot of companies, a lot of startups that are just coming through and saying, okay, here's how we can, fractionalize, shares, and we're going to create this platform, and you can use your RSPs every month to buy stocks and this thing and that thing. So it's really great to see. And a lot of our local banks are actually doing some great fintech things. So we have a bank here called the Alberta Treasury Branch, and they're really branching out, no pun intended, sorry, to do a lot more things in, the blockchain space, algos, things like that. So it's very interesting to see how they're morphing along and kind of surpassing, the big four banks that are here in Canada.
Yeah. No, yeah, absolutely. I think that's a hot industry. It really boils down to the problem, right? So if there's a certain inefficiency or a problem, and there's a software that can fix that, or maybe just kind of save a couple hairs of time or save a couple dollars, at the macro scale, that could be millions and millions of dollars, through a trade or just over time in terms of the operations of the firm. And then, one other thing that I'm interested in too with Alberta and just kind of the huge energy infrastructure you guys have, what is your guys' take on just the clean energy opportunities? Are there, I see you smiling there, but I wonder if like hydrogen energy, clean tech, is that also kind of a sector? Because we're seeing that in the Middle East, with Middle East having all these resources with natural gas, they have some really huge mandates right now for alternative energy. So that's for me also exciting. I've invested in the hydrogen energy space as well. So that was something I was kind of curious about with that region as well, and kind of some of the innovations that you're seeing.
Yeah, and that's the one big thing, Alberta, because of the oil sands, the tar sands, gets a lot of bad rap. But I can say from knowing so many people in this space, because you just meet them anywhere, right? Like if you went to Hollywood and walked into a Starbucks and said, hey, does anybody know how I can write this, transcript? You'll have 15 people put up their hands. You walk into a Starbucks here and go, does anyone know how to help me with this, oil well that's abandoned? And you'll have 30 people put up their hands. So everyone you meet is within the oil space. And I can tell you that, the oil companies here are mandated by the government to have such clean tactics and to have, they spend billions of dollars and a ton of their profits on making sure that there is less waste and that they are taking care of the environment. So from that standpoint, a lot of these oil companies now have created like an innovation fund, and they're looking at investing in solar and creating solar fields and transitioning, because they know that, you need petroleum-based products to make everything on this planet right now. But at some point that's going to dwindle, and it's going to dwindle to the point where, I think you're always going to need some sort of oil and gas. It's just not going to be this massive industry that's overtaken everything like it has in our days. So they know that they need to focus on hydrogen, solar, nuclear is a big thing that a lot of them are talking about. And I think that's, to me, I think the thing that I'm hearing a lot about and I'm happy about is that nuclear clean energy is being talked about a lot more honestly and without fear, because I think if we don't talk about that as the clean energy source, we're all just fooling ourselves, right? I honestly think nuclear, and I think hydrogen too, it's just they need to figure out a way to make the transport of it cheaper, right? And that's going to come. There's already a startup that I was introduced to a few weeks ago that has said they figured out a way to transport hydrogen at 30% the cost. So that's great. If these companies can do that and these innovations come true, I believe that hydrogen and nuclear are like the place to invest and look at, and will help the planet. And I think that's happening here greatly with the help of the oil and gas companies, because they know that they need to innovate and they need to transition. And then they can have their hands in both buckets, right? Yeah. It's just the best case scenario for them.
Tell me about your thesis on nuclear. So, a lot of people have been sharing different opinions on that, and then also just, nuclear fusion and fission, but just would love to hear any high level just synopses from your experience, just kind of dealing with it and kind of being in that epicenter there.
Yeah, I would say, I mean, I'm by no means know a lot about it. I just know what I studied and looked at and said, this is the cleanest form of energy. There's not that much waste. There are better ways to dispose of that waste now in 2023 than it was in 1970. And, I on a little bit of a side note, I think it's funny that, when we have this energy crisis starting and we're transitioning and looking for different things away from fossil fuels because, gas prices are going up and natural gas prices are through the roof. So it's, more expensive to heat our houses and to fill our gas tanks and to buy things at the store. But the moment we need that, Netflix puts out 4 documentaries showing all of the bad things that have happened with nuclear energy, right? Like they had a 3 Mile Island one, and they talked about Fukushima, and right? So it's just, it's pretty funny, I think, in a way. But I think if we talk about it in terms of 2023 technology in the nuclear space, whether it be fusion or fission, which is even cleaner, and there's pretty much no waste other than water vapor, that's kind of where we need to talk. And I know a lot of people are talking about it. And I think it's the big thing is the regulatory. You're not, people want to be clean, but no one is going to approve a nuclear power plant outside their front door. Right? It needs to be in a very remote area where if something happens, it's not going to affect hundreds of thousands of people living in an area. And that, I think, is the big hard part right now is trying to prove to the masses that it is safe and that it is the cleanest form. But everyone has these predetermined ideas of what can be. So I believe in our ecosystem in Alberta, there's a conversation about it. I don't think that it's very serious conversation. I do believe that solar and hydrogen are the front runners right now in our ecosystem. We see solar fields going up. We have a ton of flat land here and a lot of sun. So, it's just solar fields are going up left, right, and center. Great. But there are some issues with that as well, right? Yeah. And then hydrogen is the big thing because there are a lot of abandoned wells here. So there's a lot of ways to get hydrogen out of the ground. It's just the storing and the transporting of it that is a little bit of the problem. So I know things are being done, but from a nuclear standpoint, I'm a big advocate of it. I believe that things are cleaner. They're doing things the right way, but there are still, I mean, as there is anything, there are always going to be concerns by the populace.
Yeah, no, that makes sense. I think cold fusion. I mean, I remember seeing a movie when I was a kid. I don't know if you ever saw that movie, The Saint, with Val Kilmer.
Oh, I did. Yeah.
So that was a good movie. I mean, it was just really interesting because I guess there was a woman that was a professor, and she talked about the whole promise of cold fusion, and it happened actually because it was a miracle or something. But that was a funny movie. I always think about that movie when I think about cold fusion. But yeah, my sentiments resonate with yours. I mean, the feedback I've gotten is, look, it's still quite far away, but the promise is, hey, it's essentially almost unlimited energy, running off of, a couple gallons of water. So, that stuff, and also quantum, I think, is still, decades away. But it's great to see, new developments every year. And then, yeah, to your point, the hydrogen space is going to be a really hot industry. What are some of the concerns that the community has about hydrogen energy? And then also, tell me about some of those abandoned oil rigs. Is it because there just wasn't any oil coming out, and then are there opportunities for people to kind of remonetize that again and maybe bring those oil rigs to life? I guess that would be interesting to know about as well.
Yeah. So a lot of the times, yes, they've pumped all the oil out that that they needed out of there. So those wells get decommissioned and they get capped off and they go. But there is still, lots of gas down there, right? So, and then there's a company that we talked to early on when we first started, and they were looking at taking these abandoned wells, and they figured out a proprietary process where they could get hydrogen out of these wells for relatively cheap, right? Yeah. And with a lot less energy than most of these companies are doing to get out, because it involves a lot of water, and it involves a lot of you have to burn off the oxygen underground in order for that hydrogen to rise up and come into and be piped. So that's the process now to get hydrogen out of these wells. The thing is, there are hundreds, if not thousands, of decommissioned well sites in Alberta right now that have the potential to get hydrogen. So it's not like everything's there. I guess the infrastructure that would cost the most, getting the drill into the ground and creating all the space, all of that's there already. So it's just getting the equipment to get the hydrogen out and then storing it and then transporting it through pipe around to wherever it needs to go. So what's the company here? Epcor, I believe it is looking at they're transitioning a great deal of their energy portfolio into hydrogen and innovating that space and working with companies to get hydrogen. So you have one of the biggest energy producers in Alberta already saying, yeah, hydrogen could be this. The concerns on hydrogen by the masses, by the communities, I don't think there's much, because I don't think people fully understand the scope of it. I think people are just going, is this going to make my bill cheaper every month? Right? Is this going to make it cheaper? Okay, I'm in. So I think that's really the big thing right now, is just people want their wallets to be, not hit so hard anymore every month.
Yeah, no, that's really helpful. That's just really good insight to be aware of the industry. What are some other areas that you're excited about? So, as far as the agri-tech space, I'm not that involved in that sector, but I have seen a lot of robots go out and cultivate the land. And there's a series of 3 type of robots. Some robots that actually pick crops. There's some robots that cultivate, do fertilizer. I've also seen some vertical farming, but we'll love a little more insight for the community in terms of where you guys are seeing agri-tech.
So we're seeing it on that very same scale in terms of, as a chef, I went down to Sonoma a lot to see the farms where they were growing our food through the big, companies like GFS or Cisco.
Mm-hmm.
They would take us down there and we would go to the farms, to the Driscoll's Berry farm or wherever. And, you see the literal backbreaking labor of the people that are in the fields, cutting the romaine lettuce and just walking bent over, cutting the romaine lettuce and throwing it on the truck. Well, they've created tech where now it's just like a jet of water that is so thin and so fast that it just slices through the bottom of the core of the romaine, and then an arm just grabs it and puts it on the truck, and it just cuts it. So, we're seeing that tech there. We're also seeing tech in Alberta, especially, or in Saskatchewan, especially. It's one of the largest potash deposits in the world. So for fertilizers, right? We know that there is a worldwide fertilizer shortage. So if we have the largest potash deposit, we can produce a lot of fertilizer as well. So that's something that they're looking at, because the Canadian government has said that they don't want, because it takes a lot of energy and there is a lot of greenhouse gas emissions when you are creating the fertilizer and refining the potash, right? There is a lot of tech and ideas and money going into how do we make this greener, the process, and then we can get it and then we can distribute it to the world. But that's kind of the tech we're looking at right now. And what we're seeing is, again, how do we make things greener so that we can, because if we do ramp up production of, say, our wheat or, potash or our corn or barley, whatever it may be, well, that is going to add a lot of strain and more greenhouse gas emissions to the Canadians, accord that we need to make sure in terms of carbon emissions that we've promised and haven't met yet. So it'll just make it worse. So there's a lot of tech going into how do we make that better. There's a lot of tech too going into, carbon credits, looking at carbon credit projects and carbon reductions. So, that's kind of the space that we're actively looking in now too. We're a CGP in a fund out of New York State, actually, that is launching. That's going to be investing in carbon credit projects around the U.S. and around the world.
Yeah. Hey, Mikhail, I know you're on the line. I want to know if you had any questions, if you wanted to jump in. I had a couple more, but wanted to see if we're actually live on LinkedIn as well. So if people add comments, we'll try to field them. If not, we can do them offline too. I don't know if I need to add you, and I think I got to add you to the stream here if you do have questions. If not,
no, you know what? This has been very valuable. I don't know if it's loud behind me, but I'm kind of, you were mentioning, I didn't know anything about, evaluating companies, or I didn't know anything about some of your background. This was new for you. And I come from the commercial credit space. So a lot of this is similar, but new at the same time. So it's good to hear somebody else who's like, okay, I kind of questioned or doubted some of my past experience, and could I get this and really jump into the space and really start making good investments? And you did, which is awesome. So I kind of see myself like 10 steps behind you, but working to get myself in the game. So I don't have any specific questions. I wrote down a lot of notes, and then Joe, we'll be talking tomorrow. So I'll just kind of present those to you tomorrow.
Yeah, and I would say, to address that, I would say, like, if you could just find people that are smarter than you and surround yourself with them just naturally through osmosis, you're going to make some strides as well. So I think, look, the secret is we're all trying to figure this out together as we go, and you just try to synthesize. The challenge too is, sometimes there's so much data, right? There, you talk to so many people and they're giving you so many inputs, and you don't know who's right. So I think what I do is really just take all of that data from Craig and from all these people. Some people love agritech. I don't really have the expertise, but after all those inputs, maybe you do get more excited about it. And that's probably what's been working for you too.
Yeah, for sure. And I can
go ahead.
Sorry. Oh, thanks. No, I can say that, thanks very much for the comments, Mikhail. Like, I think that's great, because I'm I still feel like an outsider, right? I've got imposter syndrome every time I walk into a room, right? Like I'm a guy that knows how to make hollandaise sauce. I wasn't a finance guy. I wasn't a guy that, went to business school and those types of things. But everything I've learned in my careers and my life have brought me to this spot, and I'm still learning every day. And I think that's one of the big things is just keep learning. And like you said, Joel, just surround yourself with smarter people than you.
Yeah.
And I did that in my cooking career. I wanted to make chefs that were better than me. If I left a kitchen to go to another job or do whatever, and the cooks weren't better, or if not to my level, I failed as a leader, right? So I'm always looking to better myself with, meeting guys like Joel who are much smarter than me and have great experience, and everybody else that I've met over, my past couple of years in this venture space. And I try and do that every day. I want to be better. And the only way you get better is by, iron sharpens iron, right? So you've got to or iron sharpens steel. Sorry. You just got to make sure that you're just surrounding yourself with great people and knowing what to look for.
Yeah, I got one more for you, Craig. So with you being a chef, I think what's really interesting is, being a creator, right? So coming up with some type of experience, right? Some of the best experiences that people have is through food. Everybody in the world has to eat, no matter what culture you come from. There's a culture around food. And I think kind of like coming up with that experience. Some of my best experiences with just running my community events have been like, LPGP dinners. But like one thing that I'm kind of a little more interested in now, I've done a few investments in the food tech space. So, lab grown foods, and then also plant-based foods that actually look and taste like non-vegetarian types of foods. And I think there's a lot of innovation now in food tech that also is a subset of climate change as well, having sustainable opportunities. But everything comes full circle. Like I come from an aviation background and a fintech background, and that's kind of complemented, my experience as an investor. And I can probably imagine just you kind of with the creative mindset of coming up with like, new concepts, new and, interesting ingredients. There's probably an ingredient that you're putting together as an investment strategy that's creative too. So some of those like frameworks from like past careers, I do see flowing in. And, with Mikhail even, I was like, look, you got experience kind of with helping people with financial vehicles. I see that as like a potential debt fund, or something like that. So I like to riff off of other people and come up with cool ideas based on people's backgrounds. And, it all just comes full circle. Like everybody comes from different backgrounds. So it just kind of complements who you are as a person as you evolve. But like any hot takes on just the food tech space, the reason why I ask is, I was doing some really interesting investments in the food tech space and then started getting involved in more B2B SaaS. But then just recently with like the trends of climate change, some of those companies have done really well. So I was just curious if you've kind of been following those sectors as well, just because you were a chef also in the past.
Yeah, that to me is close to my heart, and I look at a lot of food tech companies. We're invested in one actually out of Vancouver called Dine that is pretty much in a way revolutionizing the way that analytics are given to restaurants. So they're using the data from their customer base, what's ordered, how it's ordered, the time it takes to be made in the kitchen, and they create these analytics, give it to the restaurant, but also can give it to the community and give it to the city. And that can really dictate what restaurants go where, who comes here. Like it's a very novel idea. In terms of the grander food tech space, like you said, everyone needs to eat. And our culture in North America is about, going to restaurants, eating out. There's so many restaurants. So I think that's one of the big things is that you're looking at companies that are looking to, with the labor shortage that's going on, with the cost of food just skyrocketing. I think that you have these companies using tech, using AI, using machine learning to lower the costs for everybody. So I think that that's going to be something that we're looking at. We've seen companies that have robotic arms that are chefs. which to me is like, oh man, my people are going to be done. But these arms are like actually mixing and sautéing, and then they have one chef there creating meals for a bunch of people, but they're just finishing. So it's very neat. There's some food tech funds that we've seen. It's a beautiful landscape. And when you talk about aviation, one of the things that I was asked when I first got on the company is, what is your dream? Right? What is your dream to come in? And I was like, well, I want to make sure, I want to solve world hunger. Like if we can do something and invest in a company, let's solve food insecurity. Let's solve food hunger. Let's do all these different things. And aviation background, my thing was, supersonic jets are going to be a thing of the future. If we can get a box of romaine lettuce that is going bad at the GFS plant in New York and get that to Bangkok, Thailand in 2 hours, it's not going to go to waste. It's not going to be in the landfill. We just need to figure out how to make it cheap.
Yeah. I mean, there's people I forget the name of the company, but there was one company that would take the ugly fruits and sell it. And I think it was like an 8-figure business because, sometimes the bananas have like a little dent on them, or the apples have like a spot on them. So they're not as pretty to put in the grocery store. So sometimes, or they just have a weird shape. They're like a deformed apple. So they'll, a 2-headed apple or something like that. So it's still food, right? And you can still sell it. So there was a company, forgot the name of the company. Hopefully somebody comments it here, but that company, I think it's like an 8-figure business. And, look, if I'm wrong, quote me and just call me out on the comments. I don't know exactly, but I think, if you can find opportunity where there's potential waste and turn it into some type of revenue or impact, then that's always a good thing. So.
Agreed.
Yeah. Well, hey, Craig, I know we're over time, so thanks for being so generous with all your wisdom and storytelling. And
thank you.
We'll have to get together at some point if you come out here, if I come out there.
For sure. I would love to meet up, but thanks very much for having me.
Yeah, likewise. And shout outs to Market Weave for making this happen and the connection. So thank you. Appreciate it.
Thanks, Mark.
All right. Take care. Bye.